Bomb. Hey, how y'all doing, man? Welcome to Sunday session for 9/18, September 18, 2022. Last week we definitely had some nice moves on Monday, and then all of a sudden the market went bare when the CPI numbers came out. Um, hopefully everybody was prepared for last week and played it light. Wasn't too heavy on those calls. Historically, September is a bearish month. So I hope that people are paying attention to, historical facts and being consistent on making sure that, look, don't be greedy. We may be getting back into that 30%, 15% on calls. We may be able to get back in the short term on puts. But we're definitely going to look at the charts. We're definitely going to come through and make sure we are well prepared going into this week, and make sure you take profit. I think we've been running into some issues where people are holding contracts for too long. Look, if you're not on the technical analysis as heavy as some of us, or you don't know, the support and resistance that we talk about, please collect your checks, guys. 15 to 30% is not bad. You feel what I'm saying? So if you guys are getting into contracts and you start hitting your 15 to 30%, either on day trades, if you have a plan for a great swing, then that's a different story. But if you have your day trades and you feel like, I don't like the way it's looking right now, don't be afraid to collect your checks, guys. It's not about how long you hold a contract. It's about how much we're taking off the top, how much we're just putting, having a plan and executing that plan. Okay, guys. But but we're definitely looking at the future always. This is the 1 day performance. You notice that Friday gave us some more bear signs. Here go the 1 week performance, guys. This is what you got in the 1 week. Now, if you got that 125 on Amazon put, congratulations. That was crazy. Last week I did go a little light on, how much information I'm gonna put out. I want to make sure that I was adjusted to what's going on in the market, but I know bearish was coming sooner or later. So that means if you see the market go green, like that long consolidation that we noticed with SPY, on those green days, you need to start planning for either short-term puts or, 1 week out swings on contracts if you want to do a swing. But do not get caught into these calls at this moment of the market. Just like we did in March and May and June, wait until the direction of the market changes and then make sure you start going in and having a plan for what calls are you going to make. Again, it has to be a market change. Earlier today, I was looking at SPY. If you're looking at my screen, these purple squares I got here, these rectangles, these are all the gaps that's in SPY. These are all the gaps. I want to show you guys this because sometimes we always look at the gaps and be wondering, how do we trade the gap? How do we do this? Blase, blase. But you can always notice that, whenever the stock the gaps actually can start at a support, it can bounce over the support, it can start in between. Let's go to the 1 day where I actually picked out all these. But there's gaps in between each one of these. I mean, my ideal, which I wanted 385 for SPY came down to the top of this gap is at 381. So my idea for this week that we may creep down just a little bit further, about 376. Hopefully we can get that discount at 376. That'll give us a multiple bottom type of ideal here. If we break below 376, we're going to get that 365. So again, when you're coming back in after week, when you're coming back into the market, there got to be a time where you have to regroup yourself, you have to plan, you feel me, and you have to execute your plan. So after making money off of these puts from last week, a lot of puts was put out. I don't have to do a lot, now that you get into a place where you can actually see it. You usually do two, 3 trades and you can call it a day. You feel me? You don't have to be extra. You don't have to be super, I'm on it. If you understand what the market is going to do during a certain time, buy your contract, be confident, buy multiple contracts of one company and call it a day. Know what I mean? So even if you got the SPY 385, when we talked about it on that 4-hour break, I hope we all remember that. once that 4 hour is going to show you direction, it's going to show you big time frame breaks. So that's why we use the 4 hour. Whenever we seen that 4 hour break here, that was an easy transition onto doing your puts. You feel me? So if you got that 385 at this area, I know a lot of people, you know, we talked about it on the live probably 3-4 weeks ago around that time, which was like August 17th. It's been a month now. If you got your puts here and you wrote that 385, 930 down until it gets to this point, we need to look at, and if you're holding, you look to getting out. You need to look to getting out. If you're, you know, just getting your 385 and they came in and got into the money and you already sold, congratulations. Let's regroup and let's make a plan for it. So here we go. We're jumping into the 4-hour chart. I just wanted to show you guys them gap areas, which is highlighted. I'm gonna leave them highlighted. I'm not gonna get rid of them because I really want you guys to understand that and see that consistently. But the same thing never changed, you know. Quadrant lines. Quadrant lines is going to give you the exact levels that we want to see. And you just take a small area where you can be able to notice it and take advantage of it. Pop in your quadrant lines. Let's see your setup. And our target should be the same target that has been for the last, you know, from May and June, around the 413, 415 area. Now, I mean, our bottom is at 376. Now, I mean, notice that on my quadrant lines, yes, it's hitting some of these gap areas. That's why I left them here. I want to show you how these quadrant lines are going to be running right into some of these gaps, which is fine. So if, you know, we break below 381, we definitely going to go down and try to fill that gap down about 377. My target price at the bottom is 376. On the top side, if we break above 390, which it looked like you see a 3-king setup on the 4-hour. So like Monday, we may come back strong and go retest that 398. You know what I mean? That maybe that 398 area, or let's call it 390 because we definitely got to get above this line here. But we may go test that 390, right? So again, every week I tell you guys, I don't like to buy contracts when the price is in limbo. I rather see a solid big time frame resistance break before I start getting it on the top side, or I'll see a big time frame support hold before I buy it on the bottom. So if it's in this type of position, let's wait until the decision is made. Notice my purple line is there. This is a gap, and look where price action is. It already filled the gap, so we may just go and retest this 390 real quick. It will help me make a decision. Should I get a 380 put for the weekly? That's going to be the ideal. At 390.32, let's see how the price reacts there. It's either going to be a 380 put or it's going to be on the top side 395 call at the max. I'm not trying to go too long right now. Why? Because we haven't seen an overall trend break yet. So patience is going to be crucial here. Once we see that overall trend break after we see an overall trend break, then we'll be able to make a decision and say, okay, hold up, let me go ahead and jump into some, you know, long calls. And you know, if I want to put a trend line on that side, let me make sure I got it. It's gonna be kind of funny because once this kind of messed up the whole, you know, scenario. It could have came a little bit shorter and it would have connected this trend from here to here like this. But you notice that it's kind of, you know, fickle once it broke above that. We can still use that. Let's still use that. Now, I mean, X that out, but we're still there. So again, 390 is the target. Let me change that color because I know it's a lot going on now on my screen since I added that. 390 is the target for SPY for all my SPY traders. 390 is the target for SPY. That is when we're going to make decisions on what we want to do. Notice the trend line. Notice where the support is at 381. 390 is the target. If we go to 390, 380 is the put. Is going to be the trade for this week. Be careful we going further out. I don't want to get all the way into October trying to grab all these puts when I'm already, you know, collecting the checks in September. So when October come around, I told you guys my strategy is October. Let's trade earnings again. Let's see how we're going to be early because we've been talking about our earnings early. We're going to get right back into those things. Tech companies, banks, that first week of October, first 2 weeks of October is going to be banks. By the end of the month, we should be on Facebook, Apple, AMDs, and, you know, NVIDIA. So, you know, let's see how that goes. But right now, if you're listening, 390 is a crucial area for a retest. 381 is a crucial area for support. Big time frame, big results, guys. what else we got to talk about for this week? Again, earnings. Every week we come in here. I talk about being early on earnings. I think Ken got a plan for ACN and Costco's. We talked about MU last week because their stuff is coming up on the 29th. You really want to be early just to see what type of movement it is. If those prices are at discounted prices, these are good times to start paying attention. We talked about FedEx also. FedEx died last week. I was just watching. I said that in the watch list. I said, I just want to watch FedEx. I don't know how it's going to go. But when it died, it gave me another, light bulb like, hold up, this might be a discount. So I'm going to come back and look at FedEx again. And I'm also going to give you, some ideas about Apple. I'm going to get right back into them regular bags. JP Morgan, Apple, Nike, MU. We're going to get right back into those lists and see how things are going to react once it comes down to their earning week. Everybody understand? We cool? So,
yes, sir.
So first thing first is Nike. Nike around this time of year always perform pretty well. But seeing Nike at these bottoms here at 104, it's crazy. We know Nike was just as high as 175. Last week we talked about Nike. You see my art is still in here. Shout out to the artist. We still in here with the art, but Nike ran up to as high as 169 back when it was at its peak. That was around this time last year. I'm not saying it's going to do the same thing, but we might get 128 if this works the way I'm figuring it's going to work. Hopefully it works. $99 is the bottom. $99 has haven't been that price since pandemic July. Know what I mean? So 99 is the bottom. You notice it's holding at the 104 though. So let's zoom in a little bit, get a little bit more data. 4-hour chart. I love my 4-hour chart, guys. If there's a chart I suggest, it's going to be the 4-hour. Boom, here we go. So the art that I made last week was, look, we may come, that's crazy that it fit. We may come down here, bounce off of this area here, and then retest that 113. That's the ideal that I'm getting because we're running off the same trend line. And you notice that, it closed right above that 104 resistance / support. That same support area was the same one from the 6th of September. Notice that it went from the 6th of September, it ran up to about 113. This is the same ideal. Confirmation that we're going to have a continuation of 99 may happen if we get below 103. But for now, since we have earnings that's coming up on the 29th, let's look for a nice bounce here. And then let's go. I'm going to go look at some contracts, but maybe we can go squeeze in some, Octobers or some Novembers, but I don't want to go as far as my top resistance, which is around 128. I don't really want to go, super, super high where I'm like, oh man, I'm lost in it. 125, because it hit the 123 on that's June. So 125 is going to be my max. If you can pull off a 120, 125, October, mid-October or mid-November, that'll be golden. Now, I haven't looked at contracts yet. I may change my mind once I look at contracts, but that's my idea. I just want to kind of play that up, see if it retests this 113, break and hold above, and then the crucial area is 117. If you don't feel comfortable with, over 113, 117 is confirmation, or, if it's going to continue, you can buy your contract at 117, get a 125, 120. It's going to be more expensive, but again, be more safe than sorry. You know what I mean? But where it's at right now is a double bottom setup. It's definitely giving you, a move, another vibe, off of the 1 week. Once that trend line is there, you feel what I'm saying? So don't be afraid to, jump in around 99 or $100 either. You know what I mean? I don't think not Apple, but Nike is going to drop down to $88. That's crazy. I mean, we're going way back, over here. That used to be resistance back in 2018. So let's see how that go for sure. Let's go look at contracts real quick. Not trying to be here all day, but I definitely want to make sure you guys are understanding how these charts are starting to move now. Here are your contracts here. I said October. I like mid-October calls, so that's the 14th. Nothing too heavy on the call side. On the put side, I see some 90s. I see some $130 for the $90 puts. That's because we are in put season. So don't look at that and be like, oh man, I don't trust October being a recovery month. Just look at it as being right now, we're in the put season and everybody's looking at these charts and saying, look, we may go see the bottom of the year, by the time we things starting to recover. So I'm paying attention to these contracts around the 110s all the way over to the 120s. Let's see how cheap they get. No volume yet, but they should pick up by the end of this month, especially around earnings time. So we can either put that on the back burner, put a star on it, but keep an eye on these calls when earnings starting to get a little bit closer. We got almost 2 weeks before their earnings come up. So here go November. Now November 110s are starting to pick up. That's a safer call. It's $455, but that is a safer call. You feel what I'm saying? Because you're closer into the money, and if it does recover, it's definitely gonna be deep off in the money. You got plenty of time. You can write that one down on your list just to keep an eye on it, see how cheap it get if you're willing to spend that type of money. But notice that put action is still high in volume and open interest for those. So for that expiration date. So please, play this one with caution. I'm not saying on Monday, hurry up and get it. Let's see what direction is choosing to go. Maybe we get that 88 where I just showed you that $90 call was definitely in high volume where so let's see how that go. Be patient for sure. Don't feel like you have to rush out here and just buy it because you got the money to. Know what I mean? Anybody got questions on Nike? And again, this is the trend, the first trend that Nike gave us. We could connect these lines. This could be a second trend if we bounce and recover here, but we're not going to know until we start seeing some type of movement. All right. What else we got on the list for today? JP Morgan. I like looking at banks right for their earnings because it kind of give us what earnings are going to look like for the rest of them. Now, I mean, if the banks is making money, that usually means everybody else is making money, right? So, notice JP Morgan is all the way around to that gap area from, 2020. That's crazy. This is how crazy, charting is. And I'm going to delete all this. I'm going to start all over for JP Morgan. But one thing I want to point out, it don't matter when the gap happens sometime. It really don't. It can happen years at a time. I mean, that's why I keep going over Facebook at that $300 gap. It don't matter when it happens. But notice how the price action is going to always go and make it to their point. You know what I mean? Like this is the same gap area. I mean, from 2020, and look what happened to the price. We came right back down to that area. Know what I mean? So don't never feel like when you see a gap that's years, it haven't filled the gap and it's been 2 years. Don't feel like it's never going to do it. Eventually it's going to do it. You just got to wait for timing is everything. Once you see a reversal in direction, once you see big trend resistant breaks, we'll definitely may see a nice move going on that on that gap. So here go JP Morgan 1 week chart off rip. You already see, we noticed that, right here, this is your area of trading that you want to kind of work off of for JP Morgan. Why? Because it's been in this range for 6 months, no, 3 months. This is June. So it's been in the same range for a long period of time. So I wouldn't want to be so aggressive on JP Morgan to get up to like 150s. Now, I mean, I may just want to do a 125, 130. Usually bank contracts are super cheap as a max, but let's see real quick. Bam. Here go your bottom is 113. Here go your top resistance here is 122. So yeah, you could pull off a 120 and their contracts is reasonably priced. So we're looking for the beginning of October for recovery for majority of these stocks. Here go your 1 week chart. You go down to the 4 hour. This is your setup. This is your range of trading. Now I mean, so as soon as price broke below the 117, it did come down to about 115, and then it bounced right back up, tested that 119 area again. We could add in the top trend line for this. This is when you're being consistent and just looking at charts. All charts ain't gonna be the same. They're all gonna be different, but we could, add this in as a trend line. This could be something that we can watch and see if we break above this line, it may give us a move or not. It looked funky, but let's keep it there and see how it go before earnings come around. I see a bullish engulfing here. It's testing the 117. So that means if we break above the 117, this trend line can help us and kind of guide us and say, look, if we break, this trend line, we may go test the 120. I may be able to pull off a 120 card, or it can hit the trend line and we may be breaking back down to 115. Know what I mean? So we're right there at resistance, noticing that we're right at resistance. Earnings is coming up in October 14th. So we're definitely going to be, keeping an eye out on banks. If you like JP Morgan, go look at Wells Fargo. Wells Fargo, I usually love Wells Fargo and how they move during earnings a little bit more than Bank of America. But keep an eye out on those. Let's go look at their options. And again, I want to go November. I want to go, a little bit further out. I don't want to be so aggressive with the Octobers. I want to go further out because if we do break the 119, 120, we'll definitely be able to see the 130s and get back into those price ranges that we've seen in March. So here go the contracts again. High volume, high open interest is coming in for the 140. Not the highest. The highest is 130. Again, we just said that 125s, 120s, and 115s. That's fair. The price range for the 130s is a little bit better than the most, around 150. But if you have the money to buy deep off in the money contracts, which is a 115 call, they're around 700. But you have time. The safety net is there. Again, the price has not really broken below the 115 yet. We're right there at that, trend line. Well, we're right there at that resistance facing the trend line. Like we're going to go test that. You could come on the bottom and also add a trend line to this. So, always just, continue to be consistent. You should, should be able to come to the bottom. Boom, change this up. Boom. We should be able to notice that also, higher low scenario. So just keep an eye out on these two areas because we may be able to get up in between here and break out by the end of this month. So keep an eye out on this one, man. This is definitely going to be a one of them ones because if it come to 113, we may definitely have a huge discount on the November's 120s. And then I believe that we're going to see a nice push up around earnings season around the end of October, where we're going to be able to start playing with the 119s, 125s. I just showed you the contracts. It looked like people are already buying them. So keep an eye out on that for sure, guys. This is going to be a tough week, but we definitely can make it through. I think FOMC is this week also. So that's another catalyst that we can use, a reason to buy more puts. So, keep that in mind when you're going through this week. If the day of FOC come around and the market is going crazy, or the day before FOMC is coming around, the market going crazy, think of a lotto that you can pull off and do a weekly put where you can make some money. You feel what I'm saying? But who knows? It may be that time where it may come out amazing and things change and things reverse. So just keep an eye out, be patient. Don't feel like you have to rush. But market direction has to happen before we understand what we're going to do. That means it has to be a trend break. It has to be some type of indicator where we can be like, okay, I'm confident in getting the 110 puts for JP. Once it breaks below 115, I understand that we're going to go down. You know what I mean? So please keep an eye out on that for sure, guys. What else we got going on for this week? I know Ken got ACN and Costco's on lock, but I can go over it with you if you guys want.
Yeah, you had mentioned Facebook a minute ago.
For sure.
Gap and everything. I've been watching this March 2023 $250 call and the $300 call. The 300 since it done fell so far, the $300 seems a little bit more far-fetched, but the 250 is getting cheaper and cheaper, and I done flipped it about 3 times on 30 to 40% gain.
Right.
So, I mean, right now it's at a negative 15% on the price I paid in, but I already know it's gonna come back around. So I've been trying to throw it up in the group, that leap March.
Yeah.
I think it's March 17th for 2023 or something.
Oh yeah, for sure.
A good play, good safe play with plenty of time.
Now, the thing I explained last week with Meta, which I'm congrats if y'all got that 165 put. The thing that I was explaining with Meta was that loan consolidation. It's so scary when you see a loan consolidation and then Meta breaks below that. You know what I mean? Like, as you can notice here, we did have some more downside out of Meta, and now it closed below the support / resistance at 147. And we may be able to, see more downside. We may see 131, guys. Usually when you see a big drop like this in a break, what happens? We go test that 147. If we don't break that 147, we may be looking at 140 puts, 135 puts. You feel what I'm saying? So that's the only thing that kind of scared me. But I think the idea behind what the 250 is a good idea. You know what I mean? It's a good idea. But let's see how it moves since it broke out that long consolidation. We may have a 130, and we may have that downside where it's like, dang, now the contract's getting super cheap. I may be able to pull that 250 down to like a 215, you know what I mean, or a 200. If I'm willing to pay, a certain amount for the 250, if that comes down, I can bring that down with it. I mean, I can get a little bit closer to that $200 range. You understand?
Definitely, and that's really what happened because I started at the 300, and then I flipped it a couple times on the little 30%. But just watching the movement, I started getting in cheaper and cheaper on more close to the money contracts. It'd be nice to have that leap 180 or something, but yeah, definitely keeping my eye on it.
Yeah,
and
for
just
sure.
watching it, playing it with time.
And again, their earnings is coming. It's on October 24th. Now, I mean, October 24th, October 28th. I've been seeing a lot of articles predicting that's going to get worse next year. So their fair value on Yahoo is $106, and that's using Yahoo data sheet, Yahoo evaluation. So who knows? A lot of these companies, fair value prices is really low. Even Apple fair value price is $90, according to their evaluation. So I hope you guys are paying attention to a little bit, their fundamentals also, because it's a fickle time. Now, I mean, we've seen downside from last year, November, all the way to May and June. We're in September. You feel me? We're close to that, tech is about to die again. You know what I mean? So let's see how it goes. It's tough to do long leaps. Honestly, it's tough because let's look at Meta real quick on the overall down on the 1 month. Let's look at the 1 month real quick. It's tough because again, some of these leaps we need a long-term break. If you look on the opposite side, on the other side of the realm, which is the past, notice that this is your trend line. Know what I mean? We had 3 taps here. Once it broke this area back in the beginning of this year, March, it just continued to go down. Know what I mean? So let me delete all this just to show you, clear it up real quick. But yeah, that's what you got to notice. 1 month overall trend broke, right? So you have to look at all ranges and all time frames, because who knows? You know what I mean? This may hit $100 if we continue like this, because that long consolidation, I don't like to see long consolidations when they break down. Once they break down, yes, we can make money, of course, but for that planning on that upside, it has to be something that has to change. Now, I mean, that was a tough break for that long consolidation. I'm being honest. I know that September's a down month, but I didn't think that consolidation was going to break like that. It was bouncing from 155 to 170 for almost 2 months and a half. So understanding that and seeing that, I'm just going to look. You know what I mean? If I'm not confident in, that recovery time, I'm just going to look. But that long consolidation definitely is something else. It's definitely something else. Let me make sure this computer working. Hold up. We kind of getting a little bit slow here. But yeah, while that's loading up. But yeah, man, I like the Meta idea, but let's see how that overall trend, what's going to change in the next couple months, because usually tech stocks die off in the beginning of the year. So let's see how that go for sure. All right, I think we working. Are we working now? No. Hold up, guys. All right, there we go. There we go. Boom. So let's go look at what I was going to do now. Sorry, guys. That computer thing kind of messed me up, but I'm good. FedEx. This is what I was explaining about FedEx, man. Whenever you see a stock take a drastic turn for the worse, RSI matters. Your same indicator is going to matter. You already see some type of recovery bounce as it gave a little relief bounce, but the RSI on the 4 hour is still 17. We may run up to about 166. You know what I mean? We may start picking up some type of not bullish flag, but a bearish flag, but it has to create it basically, right? So it has to, start showing you some type of direction. It may give you small relief in between here and then break down again. The news, something came out that they wasn't making a lot of money, blase, and then everything just died off. Their earnings is actually on the 22nd. So, seeing FedEx at this price range is crazy, because around this time of year, FedEx and UPS are some of them deliveries around holidays. These companies perform pretty well. So seeing it drop off like this, I'm not scared. I'm not like, oh my gosh, it's dying. You can get a small relief bounce back up to the 170. It may go test that 170 and before it drops off more. So make sure if you want to get into something like that, plan for it. But that RSI is definitely at that over sold area. So we may be able to see a nice relief up to the 170. And then we'll be able to add in the trend channel or some type of trend. And then we'll be able to make a decision on what we want to do. Here go the 15-minute chart for that. FedEx, because around earnings season, it can go either way. But if, hopefully we'll be able to bounce, create a new trend on the 15. Hopefully it stays within that trend and we go retest that 171. And then from there, we can make a decision, hopefully around earnings time, buy a straddle, put in a call, and then watch how it go. But that drop off was unexpected from $200, guys, $203, $205. It broke, everything. Once it broke 198, it was dead. It was dead. So it came down to, that's almost $40. That's crazy. So if you're a real investor, FedEx is still a good company. We know FedEx ain't going nowhere. I mean, FedEx is still in the streets.
Hey, Amazon hiring right now for their seasonal employees for this
exactly.
holiday.
FedEx is doing the same thing. UPS is doing the same thing. Holiday season, these delivery companies is booming. So seeing this price range, well, maybe this earnings may give us a discount for what's going to happen next year when January and February earnings come around, right? So think about that, plan on that, and sit back and just let things happen. But seeing it, a lot of people are looking at this as being a discount. A lot of people may be looking at this as short-term calls. I may be able to make a couple dollars off of this and then get more puts. But wherever this balance out at, which means consolidate, move sideways, whatever it's going to do, I'm gonna be looking at it, because next year, FedEx, UPS, Amazon, they should have good performances on their earnings coming around next year. We know it's voting year, so November, expect some puts. Expect some puts. So that's another thing that that's coming up this year too, is voting season is coming around in November. So be prepared for that. Hopefully October, if the plan works, October should give us a lot of money. Then you should be able to turn right back around and hit them puts in November and December. So let's see how I go. And I know you probably question like, well, why are you getting out November contracts? I'm getting November contracts to see what happened at that middle. The middle for me is the end of October. You feel me? I don't want to be buying mid-October contracts knowing that I want contracts to be in the money past their earnings. Know what I mean? So when their earnings week come, no matter what direction it goes, hopefully it goes up, I'm gonna be deep off in the money. I can sell before earnings and not care what happens during earnings. Know what I mean? I don't want to, gamble on that earnings when I know September I'm getting a discount. First of month vibes in October and earnings season should be coming around. Then I'll be able to make my money by the end of October. I ain't got to really worry about nothing else. Know what I mean? I can just reverse, get some December puts. Know what I mean? So pay attention to that, man, for sure. I just want to give y'all a heads up on that. But FedEx is something to look at. When you see stocks drop drastically like that, pay attention. Their fair value is 185. Now, I mean, we're at 162. Now, I mean, so pay attention. Costco's has earnings this week. It may get a little bit of relief. I ain't gonna give much, like Walmart and Target. They all kind of grouped together, but we may see a little bit of relief because of the earnings season that's coming around. So if Costco's perform well, it may give them the market a little bit of relief. Like, okay, FedEx may perform well too, right? So pay attention to that. They're all on the same date. They're all on the same date. So you know what I mean, let's see how that go. Let's see how that go, guys. What else we got going on for today? I think that's pretty much it. Oh, MU. I'm sorry, that's one of my main ones. I like MU. Always trade MU earnings around this time. MU is at 50 something dollars. It's super cheap for MU. Semiconductors has been up and down all year. Seeing MU at this 50 something dollars, man, is two things. It may be scary and maybe, you know, whatever. But I think we're gonna go test that 55. I'm gonna see what happens, you know, from here to here. If we go test that 55, that's gonna be decision making time. We got a small gap up to the 57, but this is one of them ones where it's like, you know, I gotta see clear direction. MU has been one of them fickle ones. AMD and NVIDIA are the ones that's taking over. MU is an older company, so they're kind of drifting away, but definitely can make some money off of this when we earn this coming around on the 29th. It has had downside, you know, for a long time. Here go your trend line from the top. You can notice it's been a complete downside on them. That's crazy. But we're definitely looking like, you know, we're right at the bottom. It's the same price it was in July. It recovered and went up to 65. I'm not saying it's going to do that again, but it's something to look forward to. Maybe we go test that 55 first. The reason I mentioned MU because their contracts are reasonably priced. I always try to give you guys a balance. I don't want to hit y'all with nothing but expensive stuff. I want to give y'all a little balance. Now, I mean, these are a little bit reasonably priced, especially with earnings coming around. We can look towards November, $60 call, 65 at the max, and then call it a day. So I'm gonna be paying attention to this one, and see how I go. And that's pretty much it, man. I've been seeing people talking about Carnival Cruise Line. I've been seeing ACN, Cam got that on lock. But it's definitely, you know, be patient during this time of the year. I'm not trying to be special. I'm not trying to find no unicorns right now. I really want to trade profitable businesses, fundamentally sound businesses during this time because it's no more of that 2000 money. It's no more just jumping in blindly and, you know, you're going to make some money. You got to really start planning this out and taking your time and getting exactly what you want. So notice I'm just talking about businesses that have been profitable year after year. And we're just trying to, you know, stay consistent on that end. Yeah, Carnival Cruise did a nice move once it got above the $10.10.
Yeah, CCL been moving. I've been on it.
Yeah, for sure. I've seen that. If we get
Then
above
you
11,
like you just said, staples, man, staples in the economy, companies that's been around forever.
yeah,
You know, hell, even during the pandemic, people were still going on cruises, which is crazy. But I
yeah.
don't expect them to recover. I still think they're gonna be doing this consolidation. Like my next level up is like $15, but I think they're gonna stick between their $11.50 and that. If the market goes down, possibly $8. But
Yeah,
between
it's
11.50
when the earnings come around. Oh, September 22nd through
29.
the 29th. Okay.
Yeah.
So again, around that earnings season, look for a break above that $11.46. You should be confident with getting a $15 call at that point, and just trading it up to 14. Your target is 14. If you want to do a $14 call, it's a little bit better.
Back.
Yeah, I agree with that for sure. But yeah, this long consolidation. Every time it hit like $8.74, 49 cents, it ran up to about $10.36, and it did it multiple times. So definitely people are trading this going crazy. They happy. A lot of people like trading consolidations because it's so simple. I mean, you know your buy-in, you know your exit, you know how to play it on the downside. So it's so simple sometimes with the consolidations, man. So definitely is.
Hey, you figure like, man, if Carnival go below that $8 and start pushing what is it, penny
Oh
stock
yeah,
range
penny.
$5.
Yeah. Penny stock
This
range
shit
is under
crazy.
5. But check this out right here. This is 2020 price. We hit 2020 price again. You feel what I'm saying? Like the bottom was $8 and some change. Yeah, so that's crazy. That's crazy. We hit down at pandemic pricing. But Carnival's still a profitable business. They're still making money. I told y'all on the last earnings that they was gonna make some money. Know what I mean? So people been still active. They outside. I mean, Carnival's still gonna do what they do. But let's see how it go for sure. I think Carnival's gonna make a move during earnings. That we may see the 15. We may see the 15. So it's something to look forward to. But they notice again, the reason I say I like consolidations because the rules still apply. Even if I don't trade nothing, if I can notice a consolidation and then once it breaks above that good resistance, bro, that it been consolidating by or a good support, the direction is there now. You feel me? I already got it. I'm good to go. You know what I mean? So even if you're not trading within the consolidation, once it makes a decision, we should be comfortable in saying, look, guys, I'm in there. You know what I mean? I'm buying me some time on some cheap contracts and I'm gonna ride the wave. So, never, look for your setup that you're familiar with. That's why I'm giving you guys basic setups. I'm not trying to complicate it. Giving out basic setups so you guys can understand, dude. You can trade within those margins. I don't care if it take a week before it to break, resistance or support. If that's your trading style, stick to that trading style. Now, I mean, you don't have to change your trading style for nobody. It's all about what you can do for you. You feel what I'm saying? So hopefully y'all understand that. I don't have to trade my trading style for nobody. I can just stick to what I do because that's where I got the most success from, is doing what I do. You know what I'm saying? So if you're planning, if you're looking at stocks, or if you're doing this on your own time, that's the best time to learn, of course. But if you figure out something that works for you, stick to that and perfect that. I mean, everything else is going to come. You feel me? Then once you get that down packed, then move over and say, okay, now
Yeah, what do you mean? It's in Zoom.
Now you guys can, trade, trend lines, and you can start trading pendants and wedge. So, keep that in mind when you're doing this. Find something that you can get familiar with, that you can, do consistently. Figure that out and then do that consistently. Don't worry about what nobody else is doing. Same thing with indicators. I don't have to have a million indicators, man. If these are the indicators that got me this far, these are the ones I'm gonna use. Know what I mean? I don't have to have no special indicator that's gonna revolutionize the game. You know what I mean? So anybody else got questions on that, man? And if this is your question to answer time, if you guys feel like asking me anything, I got about 15 more minutes, man. You guys can go at it. I did record this for the people that's coming in late or that want to see the recording. I am going to post it on YouTube. What's up, QC?
I ain't got nothing to say. I'm just here.
But again, I know, let me explain this time of the year to people. This is not your, I'm gonna make a whole lot of money right now. This is your slow time. This is the puts. Everybody that been trading puts from August 22nd to now is getting a lot of money. This ain't the time to say, let me run out and get 1,000 puts because it's put season. We're coming to the end of the season for puts. I know, and it was quick too. It already been a month. You feel me? Mid-August to now was your whole downside. You feel me? Now we're starting to see double bottom setups. We may see short-term recoveries because of the RSI, but this ain't the time to say, I'm gonna hurry up and grab all the puts I can find. We're hitting bottom right now. Know what I mean? Now, if a stock, let's use our favorite example is SPY. Our favorite example is SPY. It's so easy to look at. Now, if things, give us more downside, my target for SPY was 385. It gave us 380, 382. I'm happy with that. But if it continues and breaks, 376 and all that, okay, then you can add in some more puts. But I wouldn't want to jump off the porch on Monday grabbing puts when we're right in the middle of a resistance and a support. SPY is going to have to make a decision either one way or the other. I showed you guys all the gaps that SPY got. SPY is going to have to make a decision one way or the other before we come out with a great call or a great put. You feel what I'm saying? So don't wake up on Monday saying the market's dying. I'm gonna hurry up and get puts. Well, that conversation should have happened when the market was up here. Mid-August. When that 4-hour trend broke on mid-August, that is when you get aggressive on puts. Not when we're just hitting the bottom where I noticed that July prices, we're back at almost July prices. So that is the deal when you're, should I go long on puts? Should I go short on puts? Right now, let's do some weekly puts on green days, do some short-term calls or day trades on red days. You feel what I'm saying? Because the RSI usually drops below, especially with FOMC coming up this week. Y'all should be planning on a green day, and then y'all should be planning on that green day. You should be planning on some puts. You know what I mean? So I'm just putting that out there. We may be at 390. We may go test that 390 this week. We may even break up to 397. But if it does all of that before FOMC, I will lotto a put. I'll lotto a put to 390. If it hits 390 before FOMC, I'll lotto a put to 380. You feel me? That's what you got to think of. Don't go below this 365, this 376. I'm not doing no 360s and 365s. I'm not doing it. Why? Because we're still above that support area. Until we break below that, that's when the next decision comes around. But until then, we're in that range. We're trading within a zone. All right?
That's like comment on the cheap contracts.
Right.
Like, because carnival contracts be cheap.
Cheap.
So, I mean,
cheap.
Like, if you paying $10 for a contract and you only buy one, I'm just saying, if you only buy one and it goes up to $15, you got to remember you made 50%.
Exactly.
Now, unfortunately, you only bought one, so you feeling like you ain't made no money.
Right.
But at the same time, you got to remember, man, that's 50% on a cheap contract, and $15 is better than $0. $15 is better than $5 when you pay $10 on it. So you kind of, it might not seem like a lot of money, but if you get used to taking those 30% gains, 20, 30, 40% gains, it's easy. You can get into another trade. It's plenty of companies.
Listen,
take it there.
What's the rule I always say? Get the first base before you hit the home run, which means collect the 20s and 30%, the 15%. Your home run is going to come, guys. Patience is everything. Patience is everything in this. I'm telling y'all. Anybody else got questions, comments, or concerns? Oh, y'all quiet today. Okay, y'all won't talk.
What's going on, everyone? What's going on, Mr. D?
Oh, that's Kenneth. What's up, Kenneth? How you doing?
Not much, man. Just thought I'd come in here and Mr. QC just killing it with some of the calls on the floor, man. But that's awesome, man.
Congratulations, QC.
Yeah, cool stuff, man.
You're doing the same thing, man. It's all a team, man. It's all a family. Y'all trying to make it work together.
Yes,
Look, I'm looking forward to Costco this week because I already know you got the stuff in your you cooking up something, man.
I was I'll put it on the floor. That might take a minute.
I got it, man. Don't worry, bro. I'll look at Costco, bro. I know you'd be like, Dave, don't want to look at my place. I got you, bro. Chill out, bro. All right, Costco's, you see my charts don't change, man. Great trend from the bottom for 443, ran all the way up to as high as 556. And the peak again was mid-August. We are looking like we're getting a nice little bullish candle coming in off the 496. My resistance between there is on the 4 hours is 505.98. If we break above that 505.98, we definitely may run up to about 518. But target between is 521. The range of zone is 496.44 to 521. Those contracts are going to be super expensive. But if we break that 421, be comfortable at getting that 550. Now, I mean, that'll give you a whole trend line change. And we'll definitely be back on that bullish time frame.
What's that, your purple line there?
That's that moving average. That's that 300-day. It always, everything usually bounces off the 300-day moving average. So seeing it at that place is definitely a good idea. Confirmation line has to be that 505.98. It closed at 505.50. So if Costco's want to do what it do, and especially with earnings week coming up, again, what day is exactly Costco's earnings is the 22nd. Everything's on the 22nd. So that's 4 more days from now. So you may get Costco's traction tomorrow, the day after tomorrow. When FOMC? Thursday?
Wednesday.
So Monday and Tuesday, may be good times to get some short-term calls, short-term call swings right before FMOC, and then you may see the market turn. You know what I mean? So pay attention to what you're doing and make that plan to execute.
Let me see if it won't let me share my screen. Anyway, I'll post it. I don't want you changing anything because I think
you're straight, bro.
Last time it affected the recording, but
yeah, it did. It cut off the whole thing.
Yeah, on the 4-hour chart, right? That been at a downtrend.
I got you. I'm gonna clear this up. We're gonna go old school.
Start from 29th of August. There's a pre-market. Do you have pre-market on yours?
Yeah, everything's pre-market's here.
Okay. Yeah, start from the 29th of August. You will 29. See there's a 29. Where's that?
Right here.
Yeah, rather bad there. If you connect the bottom candle, no, the red candle there.
Right on the top?
No, the one before the big green, the one that has a wick. Yeah. If you draw the line from there, like a trend line.
Okay.
From the bottom of the wick, not the wick, just the wick. Come down, yeah.
Yeah, right.
Connect it to the green one down there. To the green one.
Yeah. Okay.
Then leave it right there. Then draw the
go
top
for the top.
One.
Okay.
Yeah.
All right. Boom.
So you see we're bouncing off that bottom trend right there.
Right.
And the last time it did that, it went to the top. I mean, this is assuming the market is gonna hold. So we gotta play this one carefully, like David was saying, right? Because if you look at it right there, we're bouncing off that bottom right there, that trend line. Yeah. And it's gonna go up to what's that line? 540.
41. 540. Yeah. The same thing I just said before I deleted it all. Yeah. I got you, dog. Listen.
That's what I'm saying, man. Like,
you know me, bro. Like I got you, bro. It's me.
Many ways to skin this cat, man.
You know, look, me and Ken was just saying that, man.
Exactly. We're just talking about that.
Be different, but everybody be having the same info.
Everybody have the same info. It don't matter how you skin the cow, as long as the cow gets skinned. But one thing I like to point out too, though, and be afraid of this. Moving averages. You see the 50-day moving average on a 4-hour is crossing the 300-day moving average. So that's something that you have to prepare for.
Yeah, that's a death cross right there.
Exactly. And it just happened.
These play, is a play before earnings. This is not something you want to go long. This is play this week and get out before the I mean, Costco did well actually last month. They released this monthly sales every time, and I've been following these guys. They released the monthly sales. They did all right. It's not Costco is not a cheap contract as well. So that's another thing you have to keep in mind.
Listen, don't forget about sympathy, guys. If you say Costco too expensive, look at Walmart and Target. Usually their charts are made the same. So, don't feel like Costco's is the last one you can grab. They all move together. Target may slack a little bit, or Walmart may slack a little bit. I like Target more than Walmart, but Walmart is a cheaper contract. With once that upside come, you get a little bit more money. Target is the same way. You know what I mean? So one might be a little slower than the other, but they all do the same thing. Your mid area is that 519.
Right. And I'm looking forward to like everything running up, maybe not after JP comes out on Wednesday. So that's something you have to keep in mind.
Well, 517. Let's use that 517. I like that better. Because it comes back on July.
Yeah, right there. But anyway, I like that trend line bounce right there in the 4-hour. It's telling us it's gonna go. It might not go up all the way, like you see if you scroll to the left, you will see a couple of times it tried to bounce. It didn't go all the way up. Right there in the trend line. No,
right here.
It didn't go all the way up. So you might just get maybe one of these days. Monday, Tuesday, Wednesday might spike. I don't know how the NS is gonna go, but this is September, right? So you never know. Yeah. The other one is the ACN that have earnings this week as well.
All right, hold up. Give me a second.
All right. This one is not a great with volume, but the cool thing about this one, if you go on the daily, or actually on the weekly or daily, anyone, it's bouncing off a major support right there. If you look at the last three, on the weekly right there, that quick line.
Hold on, I got you. Here I go. Don't mind them other lines. Let me delete that. Matter of fact, I'm sorry. I'll delete it. You talking about that right there?
That's right there. See that line right there?
Yeah.
It's bounced up that line on the weekly. If you do daily, 4 hours, it's the same thing. RSI on the daily is about 32 or something like that. So you
Okay.
see right there. But again, like I said, these guys are not the volume is not great on this one, but it's a play right there. We just have to see how it plans out. If
Yeah,
you
for
come
sure.
down, yeah,
And what's crazy is that you notice that this is a consistent support.
yeah.
And so as long as it holds that support, we may be golden. If it breaks below that support, then you already know what time it is. You know what I mean?
Yeah.
I don't know much about the company fundamental wise, you know what I mean, but it's definitely one of the ones where if it makes a direction, it makes a direction. It's strong.
This company makes about 20 billion every quarter, man. That like every single tech company out there, they use Accenture for their contracting. Because as a matter of fact, they're actually based in Ireland. But they have a big resource. Like Disney, almost half of the contracting staff in Disney is from Accenture alone. So yeah, like all these big staff, what they do, especially during this time when they let go of people, they get contractors to supply, you know, temporary staffs for them, and they release their full time because they pay the full. Well, let me
Go
back.
ahead. You was
Okay.
already talking. You might want to finish.
I don't want to waste time, but most companies, it's cheaper to have a contractor than a full-time employee because
Right.
you don't pay them benefit and everything else, right? So that's what they do. They get companies like Accenture, Capgemini, and all these companies, and they fill up all these slots they've got to obviously get the project done and obviously after the contract, they let them go. So now they're back to square one. But these companies are making a lot. They will get like 150 an hour per staff, and they'll be paying the staffs like $50 an hour. So they're killing like 100 an hour on every staff they give to companies like Disney, Google, and the rest. So, but we're bouncing off this support has been there since 2020 or even 2021 or something like that. So you never know if they make money, if they made money during this time, maybe they'll bounce. But again, the same thing applied to Costco. We've had the moving average is crossing down. So that's something you got to keep in mind as well. They're crossing down moving averages, but on the weekly, it shows we bounced. Even if you go 4 hours, you will see that we bounced nicely on the 4 hours as well. But yeah, these levels, look at that nice bounce there. The volume came in. Look at the last volume, the green bar. Nice volume came in as well. So you never know. We might see some traction into that area, going up maybe to like 281. The contracts are not cheap. I'm not playing earnings on this one. I'm playing before earnings. I'm actually hoping, it all depends. I'm hoping JP pumps us up, right? Because that's what they do after FOMC. Everything will rip during that day. Then the next day, everything comes down. No, but I'm just saying, keep in mind, these stocks, ACN and Costco, are bouncing off nice levels. We don't know if the market is going to hold them because I'm looking at Bitcoin right now. Crypto has been dying right now. I think it's down like 5% or something like that. So
yeah, I'm thinking the market continues to drop this last week. We get some good first of the month, a little recovery, off the RSI and everything for the first of the month. And really, I guess depending on what JP saying, some monthly numbers, the first Friday of October might be good for us. But yeah, it's kind of just got to play it off. Like different indicators saying different things. You just got to keep them support and resistance levels. That's how I'm looking at it.
Yes, sir.
Yep.
Yeah, man. But yeah, whatever happens, guys, prepare for the worst or prepare for the best. Just make a plan for it. If these first 2 days come out crazy, I mean, I get puts. I'll watch that RSI. Watch the top of that RSI on both sides. Because if things go super green on Tuesday and that RSI is super high, you may be able to slide in some puts and be okay.
Yep.
All right. What else y'all got? Anybody else looking at stocks, man? I was looking at gold, man. I'm just looking at different things and trying to see what we got, man. But everything is at a good place. Look like gold is gonna try to recover and push that 160, but I gotta see what it do, man. It's a lot going on, guys. But you gotta be super, super patient, man. The glory days is gonna come. You just gotta wait for it.
Yeah, one thing I was looking on SPY 4-hour chart. I put it in the premium lobby. I don't know if anyone's seen it yet, but it was a bullish divergence in the 4 hour. If you look at the RSI, Is that 4 hour, right? Yeah, RSI.
Come on, right here. Let me show you. This is the 4-hour chart.
Yours is different. I had one that was my RSI was going up. Yeah, okay, there you go. You
Yeah,
can see the RSI going up there, but the price action is going down.
yeah.
That's something you have to keep in mind as well. If you look at the last two that touched that line, and you look at the corresponding stock, the price action, you will notice that at those 2 points, like if you go to the first
Right
one,
there.
yeah, right there,
Yeah.
you see it kind of came down. If you draw a line between those two, like a lower low on the price, but there's a higher low on the RSI, that's a bullish divergence right there, which always, well, not always, most of the time says SPY is gonna go up a little bit, but again, this market, you never know what you're gonna get. So
Yeah.
anytime you see RSI going the other direction of the price, if it's at the top and it's going down, then price is gonna follow very soon. RSI is going up here, so you see the lower low, like the low right in the middle of David's chart right there. You can see RSI went up from there, but the price came down. Like the low was 390, came down 381. If you look at the RSI, was somewhere, I don't know what that one was, around that 390. Move to the left. Keep moving. Right there when it touched the line, the bottom line.
What you talking about right here?
No, RSI.
Oh, RSI right here.
Yeah, so that was
Yeah, the price is
29.
going. Price going up. RSI going down.
There you go. So whenever you see the two directions going against each other, there's always something is about to happen. But again, in this market, no one knows until you have to wait for the price action. This is
wait
not
for something to happen. And again, it's in limbo. I call this limbo. When the price is in between both support and resistance is sitting in the middle, don't wake up and grab nothing. Wait for direction. Wait for direction. You're going to see the direction, then you're going to be able to make a decision. Even if you come in on a 5-minute chart, you know what I mean? I don't really see no real consolidations on the short time frames. I seen like a support right here at the 382 and the recovery back up to 385, but I don't really see no, and that was a gap fill. I mean, if anybody caught that on the short time frame, you could have day traded that. That was definitely a 5-minute gap fill trade right here. But I really don't see, you know, a consolidation yet. But we may go test that 390. This is a crucial area. If we go and retest, I think we're going to go retest 390 and come back down.
That's what I'm saying, man. That's what I'm saying.
So, yes, stick to the same rules, guys. We locked in. And be patient, man. Mondays is tricky, guys. Let that day. Sometimes you can let Monday go by. You feel me? Monday may not be your day. You feel what I'm saying? It was easy for me to watch Monday with that super green, and I'm sitting there smiling like they about to get somebody because I'm looking at 5 different gaps on the one day. And I'm like, bro, they about to get somebody with the CPI. And that next day, it was too late. Nobody couldn't move or nothing because it happened at 8:30 in the morning. You feel what I'm saying? So don't get caught in that. Anybody else got questions, comments, or concerns? I appreciate everybody for joining for sure. I appreciate you, Ken. We do got the recording going on, man. Please watch out for the watch list. I mean, I ain't got much, man. I just want to see how this stuff work out, bro. I just want to see how the day go. The 385 puts worked out. You feel me? After that, I kind of like sit back and, you know, be on cruise control. But let's see how it go. You feel what I'm saying? To, you know, whenever you make a couple dollars, sit back and let the market flow. You're going to get another trade. Don't feel like you have to jump back out there and get something else. Let the market flow, guys. All right.
Yeah, man. I appreciate you, man.
Yeah.
Appreciate you, Ken.
Yeah, once you stop the recording, I want to ask the folks on the call a quick question. Yeah, I don't want to put on the recording.
Oh, go ahead.